Hey everyone, Stocktwits Phil Perlman here for the CME Group. I'm here at the NYMEX floor in New York City, joined today by Blu Putnam, Chief Economist of the CME Group. Blu, great to have you here today.
Good to be here with you, Phil.
Okay, let's get right into it. We're going to talk about oil and energy production. United States is having an energy boom, a production boom in both oil and natural gas over the last 8 to 10 years. Can you say a little something about that?
Yeah, it's a tremendous boom. It really started around 2006. We're up like 30% more production in crude oil than we were back then. Natural gas is even more. It's added a lot to our real GNP, maybe 0.5% for the last couple of years, but over the next couple it could get up to 1% of additional growth. You know, it's a huge factor. It's kind of funny too, the Fed never mentions it in their little QE pronouncements, but it's a big thing for the economy that we've had this energy boom.
So it's great to have a tailwind there because we're faced with so many other difficulties. And is that accelerating? Are we still seeing more production?
Well, the boom is accelerating in interesting ways in terms of its impact on the economy. See, it's not just the production of oil and gas. It's how you get that oil and gas to the refineries or the users, and then it's what the users do with it. So, like, We've had a new refinery that was just put in or improved in Indiana that's just opening up. We've had pipelines built. We're putting fertilizer plants near the natural gas. I mean, we're just creating jobs in so many different industries, and that's why people underestimate the impact of the boom, is they're not looking at the indirect effects. The indirect effects are 2, 3, 4 times the size of just the extra oil production.
So there's a trickle-down effect.
It's bigger than a trickle. It's more of a multiplier effect in the language of economists.
Excellent. And so more recently, over the past few weeks, especially since Egypt, we've seen an increase in the price of crude, a good, $7, $8, $9 move. And how does that relate? I mean, we're sure that that's political because production is increasing?
Well, it's always a little bit of a guesswork, but anytime there's a geopolitical event and the oil price rises for a short period of time, you're pretty sure that it was the politics scaring people about, worrying about, how they're going to get their oil supply next month or the next 2 months. So the spot price of oil goes up a little bit. But Egypt is not a major oil producer. Syria is not a major oil producer. So these are relatively minor things. And in fact, some of this extra price of oil may very well be coming from demand side too.
So while many just sort of slough it off that the price of oil is increasing and it's Egypt related and that's when we saw the spike, perhaps this is a tell, an economic tell that we're seeing a pickup in the economy.
Yes, and it's probably coming a lot from the United States. What's happened is that the spread between Brent, the North Sea oil, and WTI, the middle of the U.S. oil, has narrowed almost to zero. And it used to be not that long ago $10 apart. And it's WTI coming up to Brent suggests that the bottlenecks in the U.S. have been removed, but also that demand in the U.S. is rising because we have the extra supply, but we also have extra demand.
How long, speaking of extra supply, how long is it going to take us to build out our infrastructure to the point where we're operating really efficiently relative to the new production that we've brought online?
Well, when the new production really started coming on stream, 2006, 7, and 8, there was enough capacity to move it wherever you needed to move. And it was really, say, early 2011, that it was unambiguous that production had kind of swamped the distribution system. But, we're in 2013, and certainly in the case of crude oil, the distribution system is looking pretty good. I mean, the Seaway pipeline that takes oil to the Gulf was reversed. It used to move product from the Gulf to Oklahoma. Now it takes it the other way. There have been some pipelines that have been built. There have been some pipelines that have expanded. There's refinery expansion in the Midwest, so they're closer to the source. It's just amazing, but we have largely reduced the bottlenecks in crude oil. There's only a few left.
Okay, last question for you, Blu. Now let's talk about one other spread, and that is the spread between the value of natural gas and crude relative to the amount of energy that it produces.
Yeah, I love this comparison. If I give you $1 and you spend it on natural gas, you're going to get 250,000 BTUs or something, and if I give you that same dollar and you spend it on crude oil, you're going to get like 80,000, 70 or 80,000. So it's a huge BTU energy gap. And, it's had some interesting impacts. Most of the additional natural gas production in the U.S., we've consumed it ourselves. Natural gas has displaced coal to some extent in power plants because it's a cleaner fuel. Well, what we've done with the coal is we've exported it. So it's gone to Europe and China. In the crude oil area, we actually in the U.S. consume less crude oil today than we did 5 years ago. We produce more, so we actually export more, and our imports have gone way down. So some very interesting effects from the.
And how long does that take? Does that ever come? I mean, you're taught in you're taught in Econ 101 that arbitrages eventually come out of the market. Does that ever come out of the market, or it's just structurally in place?
Well, Econ 101 has its issues, but one of them is the use of the word arbitrage. Basically, take this infrastructure situation. It takes 3 to 5 years to build a pipeline. There are approvals you have to get, plans, everything, and it costs billions of dollars. You don't do that overnight. It's not financial arbitrage, and so it takes 3 to 5 years for these things to work out. But the amazing thing is they always do. But they can take a little longer than people think, particularly the Econ 101 professors.
Fascinating. The limits of arbitrage with Blu Putnam, Chief Economist, CME Group. I'm Stocktwits' Phil Pearlman for the CME Group here on the NYMEX floor. Adios.